Hey everyone, Tony here from Rebel Financial. So thanks for tuning in again today. So over the weekend, I went on a road trip and I listened to a podcast from Planet Money regarding the price of gasoline that we pay for. And it broke down the different components of the gasoline. I found it interesting. The link is below. First of all, Planet Money is a great, it's on NPR, National Public Radio. So give this one a listen when you have time. It's like 25 minutes, but I'm going to do this in a few minutes for you, just because I found it interesting. Many of us complain about the price of gas going up or down and this politician doing this or that, but the reality is most of us really don't understand where it's coming from. So let me start by giving you a few tidbits. There's about 100 million um, barrels of oil produced today. Okay, the markets are very efficient, so this could be in a lot of places. So from one barrel, we get about 42 gallons of gas coming from that barrel. Okay, so that's going to be cost number one. Oil adds about $2.40 to the price of gas. And I'm basing this off of today. And today, a barrel of oil is a little less than $100, but I'm going to use 100, and I'm also going to use $4 as the price of gas. It has been creeping down here in Ohio anyway, well, in most places, but the average is still up there pretty well. Okay, so where are we getting the oil from? These big oil rigs. And a ballpark number is pre-pandemic. We had about 1,000 rigs drilling oil, across the globe. Those are bigger rigs. If you drive through Ohio, you'll see some smaller ones in different places, but those are the main ones. Okay. To give you an idea of where we were at, it went down to 250 of these rigs that were drilling for oil at the lowest end in the pandemic. They're not going to drill for oil if it's not profitable for them. And if people aren't using gas and oil, like we really slowed down on the driving, then there's no point in all these rigs staying open. So anyway, we are now back up to 765, ballparkish as of the writing of Planet Money. So, and just so you know too, no company, they talked about the huge profits of Exxon, Shell, and all these companies, but none of those companies produce more than 2% basically of the oil that's being generated. Another thing is we have a national oil reserve. There's about 715 million gallons in there. And so they're releasing about 1 million a day now just to add some to the overall market. And I know some people are upset that, they weren't just giving that to US drivers. It really doesn't matter. The efficiencies of the market, if they were to give it to US drivers, for instance, then other countries would just gobble up other oil and it would just, smooth the whole thing out. It's a very efficient market. All right. So that's a little bit about that. The markets, so this is kind of how it begins. The refineries will see that oil is needed, so they will order the oil through brokers, and the market will then bring, through tankers, they'll deliver this oil. And oftentimes, not oftentimes, I don't know that, but the tankers can get rerouted to a refinery that maybe has offered, a higher price and things like that. So that's a little bit about that. The rigs themselves will add about 65 cents to the price of the oil. Okay, um, the refineries will. And there's one more part about this: the refineries. Well, that's kind of really where the bottleneck has been. But most of the major refineries that are working now have been around for decades, over like 50 years. We haven't built a main new one in like 50 years. And so the refinery is like, well, why would we do that when people are trying to get away from oil and gas right now? So, and by the way, when they go offline, all those workers find different things to do. They have to shut this down. But when they bring it up, it takes a month or two for it to get going. So I think we're seeing most refineries back to where they were pre-pandemic, but that is a big factor. Okay. So anyway, we're talking $2.40 for the gas from the oil, 65 cents for the refinery. And then taxes come in. In 1993, and I don't know if it was anything before this, a national gas tax was implemented, 18.4 cents a gallon. It hasn't changed. It's the same. States do change, and of course, they have a lot of variability. but the average one is about 30 cents per gallon. All right. So when you add those up, we're getting close now. We're over $3. And then the gas stations themselves, and this part was interesting too, they'll make about 10 to 20 cents per gallon as well. The gas station, they interviewed one person, and they don't want to see the prices go high because they want people coming to buy gas and coming to the gas stations and all. So anyway, that's kind of an overview, and that's getting us to the $4 with some variations in state taxes as well as what the gas stations themselves might charge. Obviously, if you've got one by the highway, they charge more than one that's not by the highway. But also the delivery of the taxes too is something that's like, I forgot about that one. That's like 20 to 50 cents depending on where the delivery has to go to. Anyway, so that's longer than I wanted to do. But just to give you an overview, but it's worth listening to the podcast. It's really pretty cool to get a little in depth like this. So anyway, I just thought I'd do something a little different here. Any questions, any comments, please put them below. And of course, if you have any questions about finances and things like that, let us know about that too. Okay. Thanks and take care.